Good morning, everyone. Hope you're all doing well. Just popping through a few videos, just to update you on the markets, on what's happening since last Friday with the Jackson Hole Symposium, the after action moves, I suppose, on Monday and yesterday, month end, which we have today, and the volatility that I'm looking out for, and of course, NFP and the rest of the week, broadly speaking. So last week has been proven to be, again, another hugely volatile week in the broader circumstances of the markets. We had massive sell-offs in the indices. We had a very significant shift from risk on to risk off as the dollar picked up a lot of strength last Friday. Now, structurally speaking, when I look visibly at the charts, this is where we were last week in the DXY. We had this massive consolidationary zone, and we had the price action for the most part moving sideways. Now, we did have an initial impulsive move to the downside, which happened just before Powell spoke, and this looked like to trigger stop hunts on short, those who were actually short against the dollar. No, what actually happened was that we had that massive impulse, then we had the Powell comments, and of course the markets reacted by going in the opposite direction. That was, in essence, a smart money move drawn about by fundamental elements. And we saw the price action on the DXY break back into the previous consolidation and then ramp up by taking out the liquidity, taking out the highs here between 109 and 109.20. Now, we did get as high as almost 109.50, and the price action has come back into this consolidation. So from our perspective now, given that we've rejected the 61.8, is really how does the DXY perform in this area? Does the DXY break back above the 236 and pushing higher? If so, excuse me, that would be the catalyst to look for euro dollar weaker, probably cable weaker, and probably a weaker Aussie and Kiwi against the USD. So it's just all about waiting to see. So the DXY becomes our metric for determining the dollar strength. So of course, if the DXY is pushing higher, that means we have a stronger dollar. So you're looking for a bias of stronger dollar against those pairs in the G7 currencies. And of course, if that doesn't materialize and we see the price action coming back, well, then it's a case of waiting to see how does the price action develop, because we did reject the 61.8. You can kind of see that there. For those who can't, here we are here. We've rejected that 61.8 perfectly. So from the Fibonacci sequences, the 61.8 has rejected. Now, I do tend to also look for 71.78 discount zone retracements. Now, on this example, we didn't get the 71.78 discount zone retracements, but it's also important to kind of factor that into consideration. Now, when we look at the euro dollar, similar scenario. Okay, we had consolidation around parity, we impulsed to the upside, then we sold off last week, taking out all of these short-term lows here, and then of course coming down to test these equal lows in this region. Now the price action flagged back up. On this occasion, we did get the 71.78 discount zone rejection, as we can see here in yellow, and the price action now is indicating a strong bias of potentially rejecting the zone. Now, funnily enough, I'm watching the price action today to see how do we react off this area. I didn't actually sell yesterday at the 71.78, which would be kind of what I'd normally do, just because of month end, just because of the after action moves and the Jackson Hole. I had a fairly good week last week, so I don't fancy giving back profits to the markets until I'm fully certain and fully sure of the bias, and that's purely bias. So at this moment in time, I'm not ruling out still going short, but I'm looking to see how does the price action develop in this region, and then obviously being able to react accordingly. So that then brings in the cable. So cable is very kind of interesting in the sense that on the higher time frames, we're continuing to sell off. We had this consolidation last week. We had the impulsive move to the upside. Price action broke through and continued selling off again. Now, this week, we had a little bit of a dead cat bounce. We came back up to reject this liquidity area around 1750, 1770, and we rejected from there. So we came all the way down into this region here, 1650. Now, this 1650, for those who have been watching my videos for the last 2 or 3 months, you will see that the 1650 level extends all the way back over into the daily order block zone, 1630 to 1670 from March 2020. This was the Brexit collapse before we had that massive recovery in the cable. Now, of course, at this point in time, it does look like the price action is going to try and take this out and see if we can potentially progress lower. Now, cable at the minute has struggled. So it'll just be worth kind of keeping an eye to see how does this develop. Now, the daily bias is that yesterday or Monday, we had the daily rejection. Yesterday, very indecision because we had the price action trying to rally, then we sold off and obviously bounced off the daily level again. Now, when I look at exclusively this structure here, particularly on the 1 hour, we're obviously seeing how the price action has garnered support, has rallied back into this liquidity area, has sold off again. Now, we've made new lows in this region and we got another dead cat bounce. Now, the dead cat bounce I was looking for was either one or two things last night because I kind of wasn't sure, so that's why I didn't do it, or didn't kind of talk too much about it. Was either this area here at 1690 being rejected, or price action flagging back up into this yellow area, okay? Because we have this last bit of buying coming in before the selling actually began. So what I was looking at provisionally last night, because there was a little lack of clarity again because of the volatility, was, well, we've got our short-term fib highs here, which I'm just going to draw it now. Give me 1 second, guys. Just gonna have to move that down. So we did get a 50% retrace. Now, normally speaking, I will never sell off of 50. I'll always look for minimum 61.8, as I said, and even if I can get the discount, so even better. Now, what's actually happened is that the price action is flagged up, rejected this area here around 1690, just shy of 117, and the price action has really sold off again this morning, specifically at 8 a.m., 7 o'clock, 8 o'clock this morning. The selling started coming through, and the price action has taken out all of this and engulfed, like in one candle we've taken out, in two candles we've taken out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 hours of price action engulfed within 2 1-hour candles. So logically now, the probable scenario is here, well, we've had a very, very sharp snap. We've taken out all of this liquidity. Let's see, do we get one more kind of impulsive fade back into this region before the next phase of selling? So I suppose now it just becomes wait and see. Bias is very much tilted to the downside, okay, because we're obviously consecutively making lows, highs, lows, another kind of consecutive high here, albeit a very, very small one. And then the price action is indicating that it's trying to sell off. Now, at this moment in time, we've obviously engulfed. We're starting to see the price action flag back up. So at this point in time, can the price action maybe get one last impulse into the 38.2? Let's just wait and see. But that's what I would be looking at there. I wouldn't be starting chasing selling down here because look how much the price action is sold off already in the first hour or two this morning. So that then brings us to USD CAD. So USD CAD, I've mentioned for the last number of weeks, this 131 level being engulfed is what I've been looking for. Every time we've come into 131, we've either wick rejected it, we've briefly popped through it and we failed, or the price action is consolidated, should I say, underneath. Now, on the daily, price action is still holding under that. And on the 4 hour, we have got this absolute mess of chop and volatility back and forth. So not really much to report here on dollar CAD until such a time that we get a clear break of 131 and we get a clear indication that the price action is holding above this level. For me, I'm not going to bother with it because it's just too choppy, too volatile. I would rather focus on euro dollar. I would rather focus on cable, and I'd even rather focus on some of these other pairs instead, which I'm going to be going through now. So not really much else to report there on that one. Now, when I look at dollar yen, what's the big thing that we can see here in dollar yen? Well, on the daily time frame, we've still got this clear bullish trend. Okay, so we still have the highs, the lows, the highs, the pullbacks, 61.8 rejections, nice key level here rejected, and we're still seeing that bullish trend on that macro higher time frames continue to play out. Like this is mental. Now, the only thing that I would say is here we've had consolidation, breakout, consolidation, massive impulsive move, pullback, highs to new highs, pullback again. So it's really indicating now, does this become a top formation, or does this become just a symbolic new high, higher low, and then looking to see can the price action continue pushing higher? Now, yesterday, the daily candle last night wasn't too enthusiastic. Because you can see here the daily candle, if we look at the bodies, is closing underneath 139. And we're seeing a little bit of a selling impulse today on the lower time frames underneath that 139. So you're starting to see a little bit of consolidation up here at this region. So it really does become a case of how does the price action react in this region at 139? Do we break through this 139, take out the zero, and ultimately continue progressing on the very large time frame bullish trend into kind of 142, 143? Or does this form a top formation for macro reversal? Well, realistically, the dollar index is going to tell us that over the next day or two. Okay, so obviously, if the dollar keeps going stronger, well, then the likelihood is that dollar yen is probably going to break through and continue trending higher. Okay, so it's just important to have all that kind of factored into consideration. Now, I'm just going to remove the fibs for a second because just clear up the chart a little bit. And we can also identify, well, since this pullback, we had the initial impulse, initial sell-off. We had a kind of further accumulation, consolidation. Price action comes down to this level, and we start to see the different phases of bullish price action. So we had that shorter three-term phase with phase one, phase two, phase three, consolidation. So we're resetting, and now we're starting to create a new bullish phase. So shorter time frames, yes, we've got three phases. This could be phase one, and this could be phase two in the higher time frames, which would indicate that if the price action can navigate above this region here, we're probably going to continue moving for another phase to the upside. Now, let's just wait and see how that one plays out, because I'm still looking for clarity, because the dollar yen is very much mirroring the DXY. Consolidation, price action moving sideways. So when we draw it out, we just need to assess the price action within this short-term consolidation. So when you dial down, and this is where the multi-time frame approach comes into importance, because when you dial down into multiple time frames, you're able to look at the price action under different circumstances. Okay, so we've looked at the higher time frame approach, we've looked at the trending price action. Now we're only isolating this consolidation structure that's developing here. So from my perspective, let's just wait and see what develops in this yellow area, and then we can formulate a clearer bias. There's no point buying, there's no point selling, because you're doing so on a whim. Okay, the price action is still moving laterally, so we don't have a clear confirmation for buying or selling. So we need to see a price action clearly break out of this consolidation. And for that alone, I'm setting just a couple of alerts. Okay, so I'm setting one alert above this wick, okay, and I'm setting a second alert below this wick. So at least that way, if the price action breaks higher, I'm getting notified of confirmation, and if the price action breaks lower, I'm getting notified of confirmation. So at least that way, then that'll bring my attention to the chart and see what's the next move, right? Because if the price action breaks through here and takes out and sets this alert, the likelihood is it's probably going to come back into this region down here, okay? Because why? We've got a secondary consolidation. If I just draw this out very, very quickly, we've got a secondary consolidation over here, okay? And lo and behold, this was the last selling candle before the reversal came through, before the buying started, and this is what I would be looking at. So it just depends on what's the next move of price action. Now, of course, on the opposite side, if the price action does break above this, obviously we're still bullish. We're still looking for the price action to continue turning higher, and that, of course, brings in these upside targets up here. So that's just what I'm looking at there in dollar yen. It's just all about being patient. There's no point of rushing into trades. You want to be making sure that you have a clearer rationality for taking the trade. Otherwise, you are completely wasting your time, and it's most likely going to end up in a losing trade because you're going to get caught up in chop and volatility on the short-term timeframes. So moving across to dollar Swiss. Last week we looked at this area here around 96.50. Now, structurally speaking, dollar Swiss last week has been again quite choppy, because we had these two peaks. Then all of a sudden we reversed. We started selling off. We had the phases of bearish price action. Then all of a sudden, with the dollar rise over the last week or so, or 2 weeks, the price action is very easily and very quickly moved to the other side. So we came back up into the short-term liquidity level around 96, 96.50, and then we started to consolidate kind of around this level. So we broke above initially, then we came back into consolidate, then we would reject it, and then all of a sudden the price action broke to the upside. Now, this again brings my attention to the 1 hour, just to, I suppose, identify what's actually happening here in the shorter time frame. So we had that reversal, consolidation, impulse to the downside, took the stops on the sellers, and then of course rallied back in, and of course had that impulsive move to the upside. Now, at this point in time, there's two phases of structure that I'm looking at here. One is the consolidation, the reversal, and the impulsive move into these equal highs before pausing. And then the second move then is this very clear continuation to the upside. Now, from my perspective, we've got consolidation, we've taken stops, and we've pushed to the upside. Now, generally speaking, when the price action creates that type of structure where we flag lows and then take highs, I immediately tend to look for pullbacks, okay? I immediately tend to look for pullbacks within this kind of structure. That's what I've learned, that's what I've noticed, and that's what I've observed over countless examples of this smart money structure. So we take liquidity on the downside, we impulse to the upside, then buy orders are set or buy orders are triggered, and then all of a sudden they stop them out. So there's two ways in terms of the stopping out. If we do start to see the selling coming through, 96.75 becomes one area, because this is obviously the last selling candle before this impulse. And alternatively, then, if the price action decides it wants to go a little bit deeper than that, if that move was to play out, it's the yellow area then I'm focused on. The yellow area then becomes much more important off the back of that. Now, my perspective is it's just a case of waiting to see how does the DXY perform over the next day or so into month end today. And of course, setting the tone for NFP, of course, on Friday. NFP, we know, is going to be very, very volatile. All the FOMC members are watching it very closely for the jobs data, and of course, setting the tone for, we had the Schiller home price index yesterday, we've the beige book next Tuesday, we've CPIs, and then of course we've the Fed on the 21st of September. So we've got a lot of things that we're going to need to keep an eye on over the next kind of couple of weeks or so. And of course, we'll be ready. We'll be looking at the data, we'll be breaking things down, and we'll make things as simplified as possible. Now, on the Aussie, again, the Aussie is quite interesting because the Aussie is continuing to make order flow to the downside. Okay, so we consolidation, we took the highs, we took the lows, we flagged back up, we got to this equal high scenario here. So again, I'm just going to draw that out, equal high scenario, and that's something that the indices done at 4,300 and S&P's done over the last couple of weeks or so. Equal highs are just slightly above the highs, and then obviously allowed for the next wave of selling. Now, structurally speaking, Aussie, lower lows, equal highs, lower lows, lower highs, and then the price action is starting to assimilate another move. So when we look at the price action, I'm just going to remove that and this. We can see very, very clearly we've got this consolidation structure here in the yellow area. We had, again, another impulse in, obviously before rejecting, 71, sold off. We talked about it last week. Now, since then, the price action has stalled out here at these equal lows around 68.50-ish area. Now, 68.50, normally speaking, when we take highs, we take lows, and then we flag back in. I didn't trade this or haven't really looked at this one because the price action didn't break this consolidation. Okay, we came into this area, but we didn't kind of cleanly break through. Now, the only thing is I would say is on the order block side, there was, even though it didn't break the lows, it did pause, it did flag back up, it triggered this area here around 70, and it sold off very, very quickly. And again, yesterday, even on the shorter time frames, we had a similar move. We had lows, flags back up to order block, we make new lows, we flag back up again to this region. So shorter time frames, there is movements occurring there to play out for. But on the 4-hour structure, we can still see that the Aussie is hanging in right here. And that's something that I've been kind of looking to say, well, I want to see the price action really initiate downside moves because it looks like it's kind of finding a little bit of a consolidationary bottom here. And of course, that again brings back in DXY to say, well, if the Aussie USD is going to continue selling off, we need to see the price action on the DXY continue to churn higher. Because if that doesn't happen, well, then the Aussie is probably going to reverse back into this 70 level again, and they're going to continue consolidation. So we had a consolidation here, and then this could potentially be a secondary phase of consolidation where the price action holds this area of interest here. So that's kind of what I'm looking at there. So it's a little bit less interesting in comparison to the Kiwi. So the Kiwi, on the other hand, is a little bit more clear in terms of the mindset and on the bias, because on the Kiwi, we have, as we know, order flow. Okay, so on the daily, first and foremost, just breaking that down, equal highs, new lows, flags back up to the order block level here around 64.75. Now we just came a little bit short, but 64.50, 64.75 was pretty clear. We obviously sold off back underneath this shorter consolidation here on the 4-hour, which I'm going to zoom in now. You can see that there very, very clearly. We had this consolidation, impulsed out, rejected the higher time frames, came back down and took the lows. So this is what I was looking at yesterday, okay? Or this is what I was looking at or would be looking at on the Aussie. Okay, consolidation takes the highs, takes the lows. We look for the flag back up, or we look for some sort of short-term relief rally. Now, structurally speaking, on the Aussie, On the 4 hour and the one, or the Kiwi on the 4 hour and the 1 hour, we had this secondary consolidation. So we consolidation around the 62 level. Bang, we hit it again with another wave of selling, and we're flagging back up to the order block area again, coming very, very close to this zone of interest. And then last night, obviously, the price action continued selling off, and of course we have made new lows. So structurally speaking, again, or sorry, new lows within this shorter term move. Now, on the 1 hour, again, we're seeing a little bit of consolidation. So impulse have moved to the upside, flags down, takes the lows, flags back up into this consolidation area here. And now we're looking to see, does the price action break this 61.25 level? Okay. If the price action is breaking through the 61.25 area here, taking out these lows, well then up onto the daily time frame brings in this potential area of interest down here. So we've got a target at 60, and then we've got another one at 59. And of course, this brings in the daily and weekly order blocks again from the March 2020 period of time. So March 2020, there was a lot of consolidation, a lot of chops. We've got an order block level there, as I said, just underneath 60. We have also a secondary one there at around about 59. So from my perspective, if we do break through 61, I'll be looking at 60 and 59 being the next downside targets here for the Kiwi. So that's kind of what I'm watching there. In terms of the data, just very, very quickly, just to kind of run through that as well. I suppose it just really depends, I suppose, on what you're looking for. I think as traders, we should be also looking at the economic calendar, because I think if you're not and you're trading just solely technicals, I'm not going to say you're going to be left behind, but you're going to find it quite tricky because you're not going to know what's happening on the shorter time frames. So today we had unemployment this morning, which held up fairly firm. We've HICPs in Europe in 45 minutes. We also have a bit of data in the US and Canada this afternoon, so kind of worth keeping an eye on that, particularly if you're trading dollar CAD or you're looking at dollar CAD. So we've got GDP in Canada, and of course we've got kind of a few bits and pieces in the US as well. With Bostic speaking, Bostic spoke last week, was quite honest in his opinions. He said, well, it's going to depend on the data. So his kind of count for the next FOMC meeting is, if the data is weaker, I'll probably lean towards 50. If the data remains quite hawkish and bullish overall to the markets, I'm going to still look at 75. So he said that pretty honestly last week. So it now becomes a case of let's watch the data over the next few weeks. Tomorrow, of course, we have again a number of data prints in Europe, mostly Spain, Italy, Germany. Eurozone, broadly speaking, unemployment rate will be interesting. Of course, we do have ISMs in the US tomorrow afternoon, and of course